Kano, and Katsina states.
Duk abin da gwamnati da shugaban kasa Muhammadu Buhari yake so a gane shine mu canja.
The Buhari government wants everyone to change positively, assist and collaborate with the government, protect public property for the development of the country and the good of every citizen.
That's news for now. Blessing and Kingsley will be back shortly after this break with Good Morning Nigeria.
If you hear a bomb explosion or gunshots of an active shooter, that might be a terror attack. At such times, always remember 3 action words: run, hide, report. Don't try to run towards the terror scene to save the situation, because there might be a second bomb blast or another attack. Run far away and take cover. Make sure you are safe first. Yes, it is in our nature to sympathize over the hurt, but remember, only trained personnel can help in such situations. When in a secured environment, promptly call relevant authorities and help will come. For anonymous reporting, call 09630-3250-5 or 0813-2222-106. If you see something, say something. Nigeria unite against terrorism. This message is brought to you by the Federal Ministry of Information and Culture.
Appreciating the resilience of the Nigerian Armed Forces, join the Minister of Defense, service chiefs and other stakeholders in the defense sector as we pray for the Nigerian Armed Force veterans of various world and internal conflicts. Venue, National Christian Center, Abuja. Date, Sunday, 8 January 2017. Time, 12 noon. And National Mosque, Friday, 13 January 2017. Time, 1 p.m. The welfare of the troops, the veterans and the families of our fallen heroes is the responsibility of all. Be a part of the national appreciation of the resilience of the armed forces, our veterans and the families of the fallen heroes. The efficacy of prayer is not to be underestimated. Join other Nigerians as we pray for Nigeria, our troops, our veterans, our fallen heroes and those they left behind. Join us. Announcer, Brigadier General Rabi Abubakar for National Planning Committee.
Hear the call of change. Stand up, Nigeria. Change is here and it's going to stay. Change begins with you. Oh yeah, make we go. Go to so let the change begin from within. Look at you, oh Geruola. Change begins with you and me. Change begins with me. Change begins with me. Change begins with me.
You're watching Good Morning Nigeria. Time now for our business report. The government is taking steps to make Nigerian entrepreneurs fit for competition to mitigate unemployment. Leah Katumba back today has the details.
The National Bureau of Statistics, NBS, has made public a calendar for the release of data in 2017. The estimated release dates show that December 2016 Consumer Price Index and inflation will be released a week from now, precisely the 16th of January 2017, along with AGO and Diesel Price Watch, PMS and Petrol Price Watch, as well as December 2016 HHK and Kerosene Price Watch. Meanwhile, December 2016 monthly fact disbursement is expected to be published 24th January 2017. The Bureau has been responsible for the collation and publication of the national demographics and other development data for informed decision-making, research and discussions. The small and medium enterprises sector of the economy has been viewed as an untapped mine of wealth and development, but more still needs to be done to bring out the full potentials of the sector. Experts say lack of requisite knowledge, inconsistent policies, dearth of infrastructure, as well as lack of financial inclusion form the bulk of factors negatively affecting the sector.
When government starts putting more focus on entrepreneurs like us, you understand, it's always the driving force for every economy in the world, anywhere you go to. If you put emphasis on the enterprises, you're bound to do well.
With government's revenue in sharp decline and an economy battling recession, it has become imperative to harness the potentials of other sectors of the economy outside oil. This is why government has taken the extra step of educating owners of small businesses on how to remain in business for overall growth.
First, the training is purpose sector specific, and we have selected 6 states in the 6 geographical zones of the Federation. And this training is simultaneously going on.
Government has consistently maintained that there is a need to upscale activities in other sectors to properly diversify the economy and reduce the rate of underemployment, unemployment, and inequality. Unemployment rate in the third quarter of 2016, as released by the National Bureau of Statistics, rose to 13.9%. Lastly, a quick look at latest figures from the Nigerian Stock Exchange. With business news, I'm Lekacheng Babatunde.
All right, thank you very much, dear Leah Katung Babatunde, for the business package on Good Morning Nigeria. Up next for us now is a review of the headlines in some of the newspapers we have with us this morning.
Bayatoibi is back from the refreshing weekend and is ready to move with the dailies this morning. Good morning to you, Bayo.
So good morning, Blessing. Good morning, Kingsley. Welcome and Happy New Year. Good morning, Nigeria.
All right, Bayo, thank you very much. I hope you had a nice weekend and, of course, nice holidays I'm seeing for the first time in the new year. So let's begin our review this morning by taking a look at the front page of the Nation newspaper. There are a number of headlines on the front page of the Nation newspaper. Just above the nameplate, we have the first obituary. Ex-Governor Kure dies at 60. Governor Kure was governor of Niger State. And then next to that, you have some 4 bulletized headlines. Boko Haram may relocate to southern Kaduna, and Federal High Court redeploys Justices Abang and Liman. And Rianeri hails unbelievable Ndidi after super debut. And 6 soldiers feared dead as Boko Haram attacks barracks. Now, those are the headlines above the nameplate of the Nation newspaper. Now, below that, you also have other headlines. Bakare 6 restructuring and rejig of forex policy. And herdsmen killed 3 policemen and 6 others in Adamawa, Niger, and Delta. Now, the lead story that's below the photograph you see on the front page there says EFCC grills 5 ex-NNPC bosses over $153 million transfer. And commission moves to seize ex-minister's posh estate. Now, those are the headlines. We can see below that a strip of other headlines at the foot of the front page. Jump to varsities. Stick to your core mandate. And Lalong hails military. Details of that story can be found on page 41. Listen. Okay, all right.
I'll start off with Daily Trust. Just like you pointed out in The Nation, the obituary for ex-Niger Governor Kure is reported here. It's on the page 3, but of course it's itemized here. Dies in Germany. Just beside that, you have federal government specialized varsities to drop law, accounting, and orders, which are the orders you find out from page 5 of the Daily Trust. Leading for the Daily Trust this morning, as the boldest headline, is a Trade Ministry budget 22 billion naira for research and governance. It starts right there but continues on page 5. And you have a graphic representation for the Ministry of Trade, Industry, Trade and Investment 2017 budget as displayed. Okay, other stories. Buhari, many Chibok girls returning soon. You find that story on page 3. External reserves down $22 billion in 2016. That story you find on page 13. Musical instruments, Sokoto sacks his bar commission. That story you find on page 5. Okay, Bayo, that's...
The people of Niger State are in mourning mood following the death of his former governor, Engineer Abdulkadir Kule. Engineer Abdulkadir Kule was the first governor, civilian governor, after democracy returned in 1999. He served 2 terms. He was age 61. He's said to have died in a German hospital where he was being treated after a brief illness. Niger State government has declared 3 days mourning for which flags will fly at half-staff, and Governor Abubakar Sani Bello has declared a work-free day on the day he's to be buried so that the people of Niger State will pay their last respect. The former governor is survived by his wife, Senator Zainab Kure, and 6 other children. The other developments are concerns with clashes between herdsmen and this time with policemen. There are reports about dead policemen and some missing in Adamawa, some part of Kaduna, and like this report that was read earlier on in Bayelsa. However, the talk of the day heightened on the appeal by Pastor Tude Bakare of Little Rain Assembly, and he says that President Muhammadu Buhari and his team must summon courage to make hard choices. Particularly, he's emphasizing the need to structure Nigeria. He emphasized that the sacrifice of our former leaders was to ensure that we had a republican nature whereby power was devolved from the center to the states. He says he also observed that the social contract was breached in May 24, 1966, when unification decree was foisted on the nation. He has also observed that for government to achieve its sole aim of change, there must be deliberate attempt to accelerate the initiative about making sure that the imperative and expectation of the public are met. He observed that despite accelerated global terror, Boko Haram attack got reduced from 22 per month in 2015 to a little 9 per month in 2016, and only for Sambisa to be liberated last December. He said that it is time for President Muhammadu Buhari to demonstrate courage and put what he described as square pegs out of round holes to ensure that his administration provides citizens with the desired change.
All right, Bayo, let's, before we take the other headlines from the front page of the Nigerian Pilot, there's a story, the headline I read from the Nation newspaper about JAMB asking universities, specialized universities, to stick to their core mandate. Some of them, University of Technology, University of Agriculture, they are busy offering courses in banking and finance. They are offering courses in law, in accounting, and in some cases they are referring to some of these courses as banking, engineering, accounting, technology. But my concern, Blessing and Bayo, is that the directive is said to have been issued by the Federal Ministry of Education through JAMB. Now, where is the NUC?
National University
Commission, that's right. It's the NUC that accredits those courses. And if those courses are not accredited, then, of course, anyone enrolled in such a program will be in a futile chase for a qualification.
The wild goose chase.
That's right. Let's take the Nigerian Pilot. Some of the headlines already on the front page of the Pilot we've read before. Just below the name flag of Nigerian Pilot. Nigeria declares 3-day mourning for late former Governor Kure. Details on page 4. Troops kill scores of terrorists and repelled Boko Haram attack in Yobe. That's on page 6 in greater detail. Now, the same Bakare story that Bayo has discussed, that's the lead story for the Pilot. Bakare to CBN, that's the kicker. Discard confusing exchange rate policy. Details of that can be found on page 4. Now, many more Chibok girls returning soon. That's attributed to President Buhari. That's on page 4 in greater detail. Now, below that, you have NSCDC. That stands for the civil defense, uncovers strange Shia faction in Borno, and MMM Nigeria introduces Bitcoin in comeback plans. Buhari's government doesn't lack direction, says Bakare. Boko Haram, that's the kicker, South African mercenary firm drags federal government to court. And federal government approves Al Makura's Lafia Cargo Airport project. Listen.
Okay, to the authority paper now. Just above the nameplate, we have about 3 stories. Nigerians are suffering, which is part of the story just read from your paper now, Kingsley. Nigerians are suffering. Tunde Bakare warns Buhari. That story found on page 4. And so on page 4, 42 oil wells, Abia to probe alleged withheld 9.7 trillion naira by federal government. Ronaldo, Messi, others in the race for FIFA World Player of the Year. You find us on page 45. And just below the nameplate, you have Ohaneze election. Nwodo, Madueke, Ejike raised the stakes. The story continues on page 2. And the photograph you have right there on the front page is that of Governor Nyesom Wike of Rivers, decorating the chairman of Nigerian Legion in the state, Colonel Wilberforce Josiah, retired, at the emblem appeal launched to mark the 2017 Armed Forces Remembrance Day celebration in Port Harcourt. And the story continues on page 2, but here is Wike conversing for better reward for ex-servicemen. Right.
Well, service to the nation must always be accorded respect. In fact, one of the highlights, I think, that will be emphasized towards January 15, which is the crux of the challenge, is that these senior citizens must be accorded preference in the National Health Insurance Scheme. Having served the nation very well, one of their challenges is always health. And if that is taken care of, it will go a long way in paying their respect. But talking about issues of the moment, Pastor Enoch Adeboye has stepped down as the General Overseer of the Redeemed Christian Church of Nigeria. He's no longer the overseer of Nigeria, but he's the overseer for the rest of Nigeria. And he says he cited a regulation by the Nigeria Financial Regulation Council of Nigeria, FRCN, that stipulates that 20 years mandatory term for heads of religious group and civil society. The Reverend Pastor has said that this regulation should be extended to other clergymen, such as those of Living Faith, Deeper Life, and Redeemed Evangelical Church. There have been mixed reactions about this. A reaction is coming from a legal advisor of the Christian Association of Nigeria. He said, however, the FRCN reportedly went ahead because there is no gazette suspending the law. They were arguing that this was intended, the legal advisor for CAN, his name is Kamkur Samuel. He said the law may have been enacted with good intention, but the way it is going about, it is trying to undermine the churches. But there are other clergymen who also have come that it is a positive development because it gives an opportunity for the young ones to grow in the church. Another report is citing the controversy between the ministry and the FRSCN. The ministry said that law should not be implemented, and the ministry is saying that there's no gazette stopping the law, and therefore it went ahead. So that is the latest on that development.
All right, I was just wondering, the issue, of course, you just mentioned now, it's been trending, since the weekend. You've had various accounts, first a letter, and then some denial, subsequently a clarification. Nobody was quite sure what was playing out. Well, the Financial Reporting Council of Nigeria Act, as you talked about, was enacted in 2011. Of course, it has to do with accounting procedures and standards for public institutions, including, of course, not-for-profit organizations, which, in this case, has been said, if they do then participate in economic activities, they also have an obligation to report. Essentially, the Financial Reporting Council and its activities, with the standards that it sets, are to deal with corporate governance issues, but especially in quoted companies.
Not only that,
yes.
In this instance, it says that any organization that is registered with the Corporate Affairs Commission must have its head, the tenure of its head, not exceeding the period of 20 years.
That's right.
It has also affected even some banks too.
Well, yeah, that's right. There was the central bank governance code for banks indicated at some point that first, two of the critical things that happened, if you recall, you couldn't then be chairman and CEO at the same time, or managing director. And if you were CEO, you couldn't stay for more than 10 years, which is why a number of some of the well-known faces in the banking sector, had to step down. There's a story on page 40 of the Nigerian Parliament. You might not be able to see that on the screen. It has to do with oil and gas. It says federal government shuts down Olokola LNG this story has to do with the passage of Abdul Qadir Kure, former governor of Niger State. But below the nameplate, you have two other headlines. It says Nigerian importers to spend 59 billion naira more on freight charges annually. And NNPC targets 60% local refining capacity in 2017. Details of that story can be found on page 6.
Just to round up, Ghana had its 5th president over the weekend. Nana Akufo-Addo was sworn in. Excuse me. He promised to stamp out government corruption and kickstart the private sector. One of his measures that he's going to put in place, we will reduce taxes to recover the momentum of our economy. Nana Akufo-Addo is a former foreign affairs minister, and he was also a former human rights lawyer. He is aged 72 years old. He is also the 20th African leader that is in that 70 years age bracket. Two other African leaders are in the 80 years bracket. They include Paul Biya of Cameroon, and two others are in the 90 bracket, include Robert Mugabe of Zimbabwe, who is 93. In his inauguration Saturday, it has become a matter of embarrassment because parts of his inaugural speech were identified to have been plagiarized, was directly taken from the inauguration speech of January 20, 1993 of President Bill Clinton, and another from that of the later President George W. Bush Jr. And a simple clause that one American president once said would have cleared that, instead of putting it in context as if they originated that. You recall there was a similar incident during the presidential campaign of President-elect's wife, Michelle Obama's speech.
Yeah, and then we also had the same situation here with us in Nigeria. President Muhammadu Buhari, of course, took prompt action. And in the case of the new Ghanaian president, the communications director has been fired. But the point is, ultimately, the person who delivers the speech takes responsibility for it. But nobody expects the president or the governor to write his own speech. So the liability is squarely, as it were, on his aides. Who is the ultimate secretary, as it were, for his speech? Who clears the final speech for him to deliver? And preparing for a speech it's not an easy task.
Yes,
it's not easy. I think there's some intellectual laziness that you cannot acknowledge what has been said before, or you do not wish to give proper attribution to what is there. The easiest thing, there are softwares now that you can detect those things very easily, particularly in the academic world. So the easiest thing to do is, if you want to use that particular idea, you rephrase it.
Yes, or attribute it.
Yeah, attribute it. That's a lot better.
It's easier to...
That's right.
Well, before we go, we might not be able to see this. It's on the inside page, a snapshot. Horse cries, breaks down at his beloved owner's funeral. It is quite touching. It's on the page, inside page of the Daily Trust. Okay to know. All right, Bayato, we would like to thank you very much this morning.
Thank you.
See you tomorrow. That's great.
Have a challenging week ahead.
Oh, okay. We'll surmount it.
Tai Sholaren re-edited. Bayato, thank you for being with us once again. We'll take a short break now. When we return, of course, we shall be dealing with how to maximize the potentials of the stock market in Nigeria.
Nigerians. Suicide bombers are not spirits. They are not ghosts. They are human beings like you and me. They live amongst us. They are your neighbors. They are your friends today, but terrorists tomorrow. So you must know your neighbor now. Security begins with you and me. Know your neighbor. Be vigilant. Be security conscious. Report suspicious persons, objects, and movements to the police and other security agencies. The security of our nation is a duty for you and me.
If you see something, say something. Nigeria, unite against terrorism. This message is brought to you by the Federal Ministry of Information and Culture.
Okay, sir. You may now go in for your interview.
Thank you. Ah, my shoe. And to think I just bought this very expensive foreign shoe 2 months ago.
So sorry about your shoes. This is why I advise my friends to always patronize made in Nigeria products. See this shoe. It's made in Nigeria and I've had it for 2 years and it's still as good as the day I bought it.
Made in Nigeria products are good quality. And stringent government regulations and certification now mean the goods made in Nigeria meet international standards. Make the patriotic choice today. Buy right. Buy Made in Nigeria.
This is a public service announcement brought to you by NTA.
So what's up, sweetheart? You really look like you're up to something.
I have a secret.
Okay.
I'll be going to Europe next week.
Seriously?
Yeah.
Like you have your visa, your passport, your plane ticket?
No, not that way. Some men are helping us. We pay them, they take us through the desert, and then we cross the sea into Europe.
The desert, the sea. Isn't that the route where many have died?
Yes, it is indeed a very dangerous journey. In 2016 alone, 4,900 people died while crossing the Mediterranean Sea to enter Europe. Many were Nigerians. For the very few who survived the journey, they are forced into prostitution or other crimes just to survive. Eventually, they will be arrested and deported to Nigeria. Don't be a victim. Don't go this way.
This is a public service announcement brought to you by NTA.
You're watching Good Morning Nigeria, and you're in time now for our discussion, which will start in earnest. But here's the background report saying that capital markets all over the world have been contributing to the development of nations. This is a broader term covering so many areas, from the bond market to other areas. But for the stock markets in Nigeria, it appears to have its own continuous slide in a downward level. Why is it so? Let's find out from Timothy Yusuf.
The year 2016 will remain a remarkable one for investors as the Nigerian capital market fell to a barrage of market forces, similar to those responsible for the 2008 global financial meltdown. This led to massive decline in investors' confidence. Analysts say 2016 has turned out to be a negative year for not only in the capital market, but in every sector of the economy, occasioned by the prevalent economic recession. The nation's gross domestic product, GDP, recorded a negative growth of 2.1%, with the Naira exchanging for 304 Naira per dollar at the official market at the close of the year, while the parallel market recorded 495 Naira. Investors sought safe havens with the recession staring them in the face, and these investments came in form of fixed income securities, Ponzi schemes and digital currencies in all their quest for higher returns. Most stakeholders attributed the slow economic activities to tight macroeconomic policies, falling crude oil prices and exit of foreign investors. In spite of the orchestrated market recovery championed by the capital market regulators, the Nigerian bourse closed for the year as the worst on the global scale. It posted a year-to-date rerun of 6.14% for the 2016 financial year. Other factors that affected market growth in spite of the enhanced regulatory framework embarked upon by regulators were hike in inflation, increase in cash reserve requirement by the Central Bank of Nigeria, as well as increase in monetary policy rate. Clearly, short-term speculative actions did not help the market. Analysts say the market scenario points to the need for increased participation of domestic investors, especially institutional investors, as well as introduction of new tradable products to deepen the market. Market participation by Nigerians is still very poor. The nation's economy is set to contract in 2017 for the first time in more than 20 years as capital controls deter foreigners from investing and revenue inflows have not been remarkable.
All right, thank you very much there, Timothy Yusuf, for that background report. We are being joined in our studios at this time by Dr. Uche Uwaleke. He's an associate professor and head of banking and finance at Nasarawa State University in nearby Kefi. Dr. Uwaleke, a pleasure to have you on Good Morning Nigeria today.
Thank you very much. Kinsley.
And then also with us here in the Abuja studios is Dr. Afolabi Olowokere. He's head of economic research and policy management division of the Securities and Exchange Commission. SEC. SEC, of course, is the regulator of the capital market. Dr. Olowokere, a pleasure also to have you join us on the program.
Thanks for having me.
All right.
And moving to our Lagos studio, we are being joined by Johnson Chukwu, a financial expert. So Chukwu, Happy New Year and welcome to the program.
Happy New Year and good morning.
And moving over now to Kano, where we're being joined via Skype by Dr. Farouk Umar. He's the President, Association for the Advancement of the Rights of Nigerian Shareholders, ARNS for short. Dr. Umar, thank you very much for joining us on the program this morning. Well, we'll try to establish the fact that he could hear us. We'll start off our questions and let's take a look at what exactly, how did the stock fare, or the stock market fare in the last part of the year into this big new year. Okay, I'll start off with you, Dr. Olowokere. Let's take a look. There was this lull experience in the last quarter of the year, and also the beginning of this year, the first trading days actually had them being dealt with on a different note. Okay, I'll come back to you. Let's start off with Dr. Olowokere.
Okay, thank you very much. Happy New Year once again. A very good way to look at the performance of the stock markets in 2016 is to take a look at the major indicators of the market and how they fared. One of them is the market capitalization, equities market capitalization. Of course, if you say the capital market, you're referring to both the stock market and the bonds market, but we are focusing on the stock market. Exactly. Equities market capitalization slumped from 9.86 trillion in January. In fact, as a matter of fact, on January 1st, down to 9.25 trillion on 30th of December, the last trading day of 2016. That's about 6.2% loss. If you also take the index, the all-share index, the stock exchange has 12 sectoral indices. Okay, the main one is the all-share index. If you take the all-share index, it dropped again from about 28,000 basis points to about 26,000 basis points. So you find all of that decline. And if you also look at the stocks that are listed on the main board of the stock exchange, about 168 of them, in 2016, about 35% of them were inactive. So 62 of those stocks were inactive, and majority of them were in the financial services, sector. Okay, the primary market too was inactive. We didn't hear, much of initial public offerings or even other follow-ons in the market, as opposed to previous years. And of course, the reason is not far-fetched. It has to do with the economic downturn that we witnessed in 2016. It clearly mirrors the economic performance of 2016, talking about the contraction in GDP. First quarter, 0.36%, second quarter, 2.06%, third quarter again, 2.24%. So it wasn't surprising that we had this performance. Again, there was also the case of inflation. Inflation rate jumping from 9.6% in January 2016 to 18.48%, as of November. Unemployment rate too was also an issue because as at the first quarter of 2016, it was 12.1, 13.3 in the second quarter, and 13.9 as at the third quarter of 2016. So all of these factors, of course, contributed to the situation we had. Of course, the major culprit in all of this, has to do with the slump in oil revenue. Not just the oil price, because the average oil price we had for 2016 was even in excess of the $38 per barrel that we used as benchmark. But the major challenge was, of course, the output. Now, because we had that oil price, and because of the defects in the economy, where oil receipts account for over 90% of foreign receipts, we had that forest scarcity. So forest scarcity coupled with energy challenges fueled the bearish sentiments that we witnessed in the stock market in 2016. Yes, in 2016.
All right, thank you very much, Dr. Waleke.
Yes.
This prolonged lull actually have been observed in the last 3 years, at least from industry watchers. Why, despite all the intervention, where do you stand? What exactly has been happening?
Okay, I think Dr. Waleke has said quite a number of things in terms of the background information and statistics, so I'll just move straight to some other factor probably didn't mention. We are in a global world. Investors are from different parts of the world. I mean, whatever happens in their countries will affect their behavior. There's something called home bias. Home bias in the sense that if your economy is doing fairly better than other economies, you probably would like to stay in your country. So if the US is trying to raise rates, and as they've done in some cases, there are quite a number of investors who prefer to stay at home than come to your market. If you also look at the performance in terms of foreign portfolio investment, it has fallen for about 52% in the last 1 year. And the transaction generally on the stock market has fallen for about 42%. In other words, because you are operating in a globalized environment, whatever happens around the world also affects your market. And if you look at the economy of the world, it has not fully recovered in the last few years. So we can't be isolated from the rest of the world. And one of the major impacts of that global economy is felt on the oil price. And as he said, Nigerian economy is quite dependent on oil, and it has about two channels, the revenue channel and the foreign exchange channel. The foreign investors that will come to your market are interested in, if I come in, would I be able to go out? What is the level of your reserve? What is the growth prospect in your economy? Therefore, whatever happens to your capital market is a function of the global environment, and that global environment also affects your domestic economy, which also affects the companies that operate in your economy. So quite a number of issues are affecting the capital market because it cannot be analyzed in isolation. You say, how do we stand as a regulator? Of course, the regulator cannot just sit and say, let's see how it unfolds. But we understand something, that when it comes to capital market activities, there will always be cycles. There are periods of boom, there are periods of bust. But what the regulator does as much as possible is to ensure that the period of bust is, the impact is not felt such that people don't run away from it.
To the nitty-gritty of how the regulators will actually channel in all of this. Well, let's go over to Lagos. Kingsley,
That's right. I was just wondering, Mr. Johnson Chukwu, of course, we've had you a number of times on Good Morning Nigeria, and this is what subject matter we are discussing is your area. I would like us to back up a bit and then take a historical view of things. 10 years ago, there was a bubble on the stock market in this country. And then in 2008, that's 9 years, sometime beginning in mid-February and escalating in middle of March of 2008, the bubble burst. This was well before the global financial crisis. Has the Nigerian stock market and indeed the capital market fully recovered from that bust that occurred in 2008 as a context for discussing what has just happened in 2016?
Well, I wouldn't say the market has fully recovered from the bust of 2008. Simple reason is that we've seen stocks with good fundamentals have not recovered back to those levels they achieved in 2008. But you have to actually look at what happened in 2008. There was a lot of credit that went into the capital market. It was a situation where both domestic credit and foreign funds were pursuing limited volume of stocks. And then we also had the issues of malfeasance that occurred in terms of capital issuance. But if you take the totality of where we are today compared to where we were in 2008, I don't think the market has fully recovered. We've seen some level of recoveries, but overall, we were looking at about 22 trillion, something like 11 trillion prior to the market crash. We've not gone back to that. Today, as at the close of business on Friday, we had about 9.03 trillion in market capitalization. And that, given the fact that we have had additional listing over that period of 10 years, so you can't say the market has fully recovered. But if you look at why the market has not recovered fully, we have to look at what are the exogenous factors. The exogenous factors include what happens in the external environment, the price of crude that determine whether foreign investors are interested in our stock. And you also have to look at our policy environment, local policy environment. Particularly what has happened in the past 1 year, beyond the issue of withdrawal of foreign portfolio investors, is that we have seen a shift in investment from equities to fixed income instruments. We have seen investors underweight their portfolios in equities and overweight them in fixed income instruments. If you look at the institutional investors in the country, like the pension fund administrators, they have moved a lot of their investment to fixed income instruments because the fixed income instruments are very attractive. So we have to look at two segments of investors: the foreign investors that can only come when there is dollar liquidity in the economy, and then the local investors who are not necessarily affected by the exchange rate, but are influenced by the return on different classes of assets. And today, the return on fixed income instruments is far better than the return on equities instruments, and therefore, investors are moving away from equities to fixed income instruments. So the downward trend we've seen in the equities market is not just because foreign investors have withdrawn their investment from the Nigerian market. We also look at the policy environment locally have incentivized investors to move to fixed income in place of equities.
All right, Johnson Chukwu, thanks a lot. I was just wondering, in terms of still pursuing the issue of recovery from the crash of 2008, virtually, I mean, some of the high-flying stocks at the time are now what you can loosely refer to as penny stocks. Now, 10 years ago, we also saw some measure of democratization of investment in the stock market, in which, everybody, Tom, Deborah, whatever name you want to mention, could put in their money there rather than chasing fixed income instruments such as treasury bills. But these days, if you were to speak to the average Nigerian about the stock market, they're going to ask you, look, I got my figures burnt in 2008, why should I go back there? Is that sentiment against the stock market still lingering? And if so, how can we begin to overcome it?
Well, the sentiment to some extent is still there, but I don't think that's the overriding factor. Investors recognize that sometimes you lose, sometimes you gain, but investors are conscious of where the risks are staked. And today, the risks are staked in favor of equities. I mean, negative for equities. If you look at what has happened in the past 3 years, in 2015, the market lost 17.36%. In 2016, the market lost 6.17%. In 2015 and 2016, the market has lost overall of 23.5%. And compare that to the return on fixed income instruments. Investment in federal government treasury bills, 1 year 364-day bills, give you a coupon of about 18.5%, 18.6%, which gives you effective yield about 22%. And you're looking at, over the period of 2 years, you've lost equities on average have lost 23.5%. Whereas in a single year, you can actually make, without the risk that return will not come, because the good thing about fixed income instrument that the return is assured. The capital is assured, return is assured. And you can make 22% by investing in federal government fixed income short-term instrument. So investors are rational. The investors are no longer held back by the fact that they lost money in 2010. Investors are held back from investing in equities because they have alternative instruments that can give them a short return on their investment with no risk, because federal government treasury bills are considered as risk-free. And that is what is driving investors away from equities to fixed income. It's no longer just that they're held back by the fact that they lost money some 10 years ago.
Chukwu, thank you very much. We'll go over now to Dr. Farouk Umar in Kano, who's joined us via Skype. He's the President Association for the Advancement of the Rights of Nigerian Shareholders, like we introduced earlier. Dr. Umar, good morning once again. I hope you can hear me. Now let's take on some of the concerns by your members as regards the law or the continuous downturn. or the downturn that as you have seen? What are your own comments and what are your worries?
Good morning, everybody. My worry about the capital market is that, like the discussions that had taken place so far, investors, we have lost confidence in the market for 3 reasons. No capital market will flourish when you have corruption in the country. We commend the present regime in its efforts to fight corruption. Less corruption is fought, the capital market will not strive. Some brokers had many infractions. You give your money to a broker, you trust him to buy shares for you, and your money is gone. And this is why currently we are commending the leadership of SEC, because stockbroking firms that we thought nobody could punish them, today the story is different. The second reason is electricity. No foreign investor will come into a country and invest when he has to run the company on diesel and LPFO. If you look at the cement companies in this country today, most of them are relying on LPFO. Because of corruption, they can hardly get the product directly from NNPC. We have to buy the product through middlemen and so on. And as such, the price of cement is high. People will not buy the cement if it is very costly, and then the companies will not make profit. And the third reason is insecurity. Who would go to Maiduguri 2 years or a year ago and establish a factory, for example? And again, you have to commend the present regime, because we have seen a big development, a big progress in fighting insurgency. And look at the oil companies now. The shares are down because the price of oil is down. Insurgency in Niger Delta. I mean, these things are affecting us. And then on a final note, I would say that the issue of unclaimed dividend. You go and invest your money in the market. Your dividend, you cannot get it. You cannot claim it. And this is, again, affecting our confidence in the market. And again, we have to commend the DG of Stock Exchange, because now we have electronic payment of unclaimed dividend. And he has already forced the companies to return 90% of the unclaimed dividend to the companies. But I think he should go further to ensure that we have unclaimed trust dividend trust fund, as it is done in other countries. And I think if these things are done, and he keeps monitoring and punishing stockbrokers who make infractions, this may bring back confidence into the market. And again, remember, we used to borrow from banks to buy shares, but today banks cannot give you loan to buy shares because of what is happening in the market. And then so many over-regulations. Look at the banks. They are not making money because, one, they have to pay money to AMCON. Now, even where they are making money, CBN is coming with so many regulations that it is difficult for any bank today to make a profit. And I think over-regulation will not really help us. We have now TSA, which is good for the country, but you see, money that is not public sector money, CBN should allow the banks to manage them. And I think CBN, unless they stop over-regulating the sector, we have a problem. And that is why you see banks like UBA, they are going outside. They are going to other countries that the regulations are relaxed. They don't have AMCON, to deal with in Ghana or in Gambia or in Uganda. So I think, again, I'm appealing to the regulators to make the capital market strive. They must stop over-regulating the industry.
All right, Dr. Farouk Umar, thank you very much. We'll come back to you again in the course of the conversation. To return to our Abuja studios, Dr. Uwaleke, that's the point made by Johnson Chukwu is the fact that we are seeing investor preference for fixed income instruments such as treasury bills rather than equities. Now, what does this mean in terms of growth and ultimately how we get out of the current economic recession if investors are showing less preference for equities and more for fixed income instruments usually issued by government?
Yeah, thank you. Kinsley, the last National Bureau of Statistics report on capital importation into Nigeria spoke about an increase in capital importation to the tune of $1.8 billion. And what is interesting about that is, or what is worrying rather, is that over 85% of that capital importation didn't come by way of foreign, direct investments. Didn't come by way of investments in plant and machinery. Okay, they came by way of investment in a foreign portfolio. And that foreign portfolio was not even in equity, but in government securities, treasury bills and bonds. And why that is so is because of the high yields. Just as Chukwu mentioned, investors, even foreign investors, showing preference for those those investments, and that's because of the tight monetary policy that we have in place today. With monetary policy rate as high as 14%, okay, you find yields of government securities going up. And again, another worrying aspect of it is that even in that fixed income market, especially the bonds market, it is the federal government that is that's dominating, crowding out the private sector, so to speak, because you wouldn't find a company issuing bonds at any rate that is lower than that of that of the federal government. The federal government is doing issuing a security at 19%, because the federal government security is said to be risk-free. That is the one the investor will embrace. Okay, so for the private sector to be able to borrow, from the same market, the private sector, should be able to offer the investor, something that is higher. So that is where the challenge is, and in my view, it's not helping, the economy at all, because as I said, when investments come into the capital market, they don't come into equities. They come in fixed income securities, bonds and treasury bills. Treasury bills, and of course, they are short term. Once there is any little shock in the economy, these same investors, take away, their funds, and of course that also affects the exchange rate. Okay, so and that's also part of why you find a lot of financial institutions having problems, in 2015. Look at stocks like Sterling. Let me even mention Sterling, Sky Bank, Fidelity Bank, turning today as penny stocks, and that's probably why the Nigerian Stock Exchange has even reviewed the Nigerian Stock Exchange NSE 30, the index, trying to exit. They're now exiting Diamond Bank and Sterling Bank, and then welcoming Presco and Okomo Oil, because these are stocks that performed well, last year, again on the back of favorable government policies on agriculture. Now, we talked about 2016 and how stocks fared, but agri stocks didn't fared better, because if you also look at the GDP reports that we've had, the agri sector was spared of the contractions that we've had, successive contractions that we've had. So that also reflected in the agri stocks. Today, Okomo Oil, Presco, doing at 14 naira, each of them, doing, very well, as opposed to some stocks in the financial services sector. Of course, you also know that in 2016, a lot of banks battled with issue of high non-performing loans. Again, something you can also tie to the fact that we had depreciation of the naira. Many of them were already exposed, to the oil sector. The banks that before now, we are doing well. We saw them, doing, apart from Zenith and GT Bank at over 20 naira, and Zenith Bank at around 14 naira. Apart from these two, and maybe Stanbic IBTC at 15 naira. Many other banks we are trading, at below 10 naira. So the financial services sector was hit. Agri stocks, did well. The ones in the consumer sector of the stock exchange, some of them too, felt the impact, of the downturn in the economy in 2016. So for me, what the investment that will really drive the economy, that will really create jobs, are investments, real investments, because when you invest in equities, you're helping these companies to raise money, you're helping them to expand, okay? When you also invest in corporate bonds, that is the bonds issued by these companies, you have the same effect. But as I said, unfortunately, the investment in bonds, are dominated by the federal government. So they're only lending money to the federal government. And of course, the story today, that the federal government, the cost of servicing domestic debt, has gone very high. And that's because the yields in government bonds have gone high. So that is not helping the economy, in my view.
Right, Dr. Yes, Waleke, thanks. I was just wondering, Blessing, the point made by Dr. Farouk Umar concerning the behavior of some capital market operators. We know that when they had a boom, some of these reports were fairly common then as to how some operators, misbehaved. Do we still have a high incidence of negative conduct by capital market operators, particularly those in the stock market dealing with shares?
Not as we had before. And I think the regulator has tried to put a lot of policies in place. Dr. Farouk mentioned about 2 of them, and I would like to add 2 others. He mentioned the issue of direct cash settlements, and that was a very good game changer in the market, in the sense that stockbrokers cannot sell your stocks without you being in the know. Before now, people just hear that, oh, my stock has been sold, and something that it was borrowed, it was transacted, but I was not aware. But now you will always be aware of what is happening to your stock. That is a way of boosting the confidence of investors. In this type of market where information asymmetry is a bit high, you want investors to have confidence in the market before they can then come back. So direct cash settlement is a very interesting and very effective policy in the area that the regulator has been able to implement. Another one he mentioned is the e-dividend. In the e-dividend, before now, you have to be struggling with a lot of dividend warrants, whether they should be paid to the bank, whether they can take it on savings account, how to deal with it. It was a big issue, and there was signature irregularity and quite a number. A lot of people have quite a number of dividend warrants that are not paid. But now, once the dividends are paid, they are paid directly into your accounts, and that makes it very seamless and very interesting. And that's why the regulator has always been making this advertisement that everybody should go for their mandate, to mandate their dividend. So in other words, you go to the bank, you take a form, and they indicate the companies that you have stocks in as the registrar. Immediately you do that, the dividend that have been accrued over the past can be paid directly into your account. Subsequent dividend will then hit your account. And as of now, we have about 1.7 million accounts that have been mandated in the capital, and 1.4 million of those accounts have been effectively attached to the BVN. Actually, we want to use BVN to identify uniquely investors in the capital market. Before now, one investor can have several shareholders' accounts, and there are duplications of accounts. But what the regulator is also doing to be able to know how many investors do we really have in terms of numbers and in terms of unique investors. So those are things that the regulator is doing. Another thing the regulator is doing is the risk-based supervision, in the sense that before now, you just go to supervise in a classical way or traditional way. But now you need to understand the balance sheet and every aspect of the activities of the capital market operators to be able to know what constitutes risk and how do you deal with the risk, so that investors, especially the retail investors, are not at the receiving end Of course, you know, once beaten, twice shy. Quite a number of investors that ran away. Some of them are yet to come back. Even when they come, they are very careful because everybody is. you have to play safe. But you just have to boost the confidence of investors. And the regulator is also trying to do a lot of public enlightenment. There's financial literacy week. Quite a number of things going to different zones. I mean, we were in Port Harcourt, Abeokuta, Kano, trying to make sure that people understand the capital market. It is a knowledge-driven market. So you must understand it so that you don't burn your fingers.
Okay, thank you very much, Dr. Olowo Okere. We'll return to Johnson Chukwu in Lagos, of course, from everyone's perspective. There are different things that should actually help build the confidence of the investors, whether domestic or even the foreign. Now, let's take a look at all those areas that are still of greatest concern. Dr. Umar talked about overbearing regulations. Well, you might wish to talk about that. But making this recovery path in 2017, because some of those indicators that you have mentioned are still following into the year. How do we begin to address some of those areas of concern to everyone in the industry?
Well, I think we have to start from the macroeconomic policy environment. The capital market mirrors the performance of the general economy. Like one of my co-discussers, I think that's Dr. Uche mentioned, we saw a contraction in the economy throughout 2016, 0.36, 2.06, and 2.44 contractions in the first 3 quarters of last year. We need to address the issue of the macroeconomic environment. I mentioned the issue of interest rates. If we want to restore growth in this economy, we must address the issue of both local currency liquidity and foreign currency liquidity. Particularly the one that is within our control is local currency liquidity. We have a situation where a lot of funds are moving away from the vault of the banks to the vault of the central bank as a result of high yield and high volume of offers of treasury bills. That is reducing the available liquidity in the economy. So credits are not going to even the real sector of the economy. So you are seeing a situation where the public sector is carrying out the private sector. And you cannot have recoveries in the capital market if you don't have a buoyant private sector. If the economy is contracting, companies that are listed will not be able to make good returns, and therefore they can't pay dividend. And they don't make good returns, then their market prices, the equity market price, the equity prices will reflect their underlying performance. And so we need to restore economic growth at the private sector level. What we have seen so far is that even the policy announcement contained in the budget is focused on reflecting the economy through the public sector expenditure. But it seems to have the private sector as its blind spot. Growth must come in the private sector. The company you are buying their shares must be able to make good returns on their assets, as to pay good dividend, and it is those future stream of cash flow that we are buying in the equities market. So that must happen. Then the other aspect we must address is the foreign currency liquidity situation. We must achieve some level of stability in our FX environment. And that could come in form of one that is within our control is to address the crisis in the Niger Delta. If we improve on our volume of production, but today, last December, we did about 1.45 million barrels per day. If we can go back to something close to 2 million barrels per day, given current price of crude, we should have enough earnings from our traditional source, which is crude sales, to stabilize the exchange rate. If you need to stabilize the exchange rate to expect that foreign portfolio investors will become aggressive in your stock. The third factor is that we need to restore confidence on the Nigerian economy. Previously, our instrument used to qualify for JP Morgan Barclays emerging market indices. Today, we have been ejected. We've seen our sovereign risk downgraded by Standard & Poor's and Fitch. We need to create the right environment that foreign analysts, foreign portfolio managers will begin to assess us positively. We need to do those things before we expect market recovery in 2017.
Johnson Chukwu, while we are still with you, that's a point, gentlemen, I'd like to raise at this time. Dr. Olowo Okere referenced it, and you've also just touched on it. In other words, you say foreign investors, they are keen on investing when they are sure that they can also repatriate their returns. And one of the ways they seek to have confidence is to take a look at your foreign reserves. I've often wondered why we have this obsession about our foreign reserves. I mean, this is not the only economy in the world. Elsewhere, you don't find this level of obsession, even with other African economies. Are we running our foreign reserves, just for foreign investors to come and then download it from time to time?
Well, not really. You see, we have a unique or peculiar economic environment or foreign exchange earning situation. Because our foreign exchange earning is basically tied to crude export. Like 90% of our foreign exchange earning comes from crude export. Other countries have more diversified foreign exchange earning sources. So they are not in a situation whereby if the price of crude or price of a single item moves in a negative direction, the entire economy goes into a crisis. Any country that has a mono export product will be focused, will be panicking whenever the price of that product changes. And that's the situation we have today. If you go to more advanced countries that have more diversified foreign exchange earning sources, they don't have to be focusing on their foreign reserve, because the foreign reserve gives investors confidence that that country is in a position to meet its foreign currency obligations as at when due. And if you have diversified earning sources, then you are not you will not be so much concerned about the price of a particular product. And that's our own situation. Until we diversify the economy further away from oil, then our foreign reserve will be a critical factor in determining who comes into the country to invest on short-term basis.
Let's get your take on this.
Yeah, thank you. You asked why the obsession on foreign reserves. Just as Chukwu said, it has to do with the structural defects in the economy. The fact that we're also relying so much on oil. Look at Egypt, for example. Egypt's foreign reserves is also about the same size with that of Nigeria, $25 billion. And yet, Egypt was among the top countries in the world in terms of stock market performance in 2016. Even when Egypt had or still has a challenge in their forex, in their exchange rate. Remember, Egypt not too long ago devalued their currency from £8 to the dollar to £12 to the dollar. But the foreign reserve is about the same size as Nigeria, but it didn't really reflect in the stock market performance, because as I said, Egypt and Zimbabwe had the best stock market performance in 2016 as opposed to Nigeria. So our challenge is the fact that we are relying so much on this source of government revenue. And if you also notice the performance of stocks, in 2016, and even before now, we tried to mirror, the vagaries in the international, oil price. Towards the end of last year, when oil price spiked to, above $50 per barrel, we saw stocks like Mobil, Texaco, Conoil, doing very, very well. Stocks in the oil and gas, subsector, mirroring the fact that oil prices are going up. And anytime you find oil price, crashing, you find these stocks also having issues, especially the banks too that gave loans to some of these oil companies, because most of the banks, we understand now, restructured their loans based on $30 per barrel. And now that oil price is doing above $50 per barrel, okay, there is hope that in 2017 some of these stocks will begin to appreciate. So I agree with Chukwu that the challenge, the major problem, has to do with the monoproduct, nature of this economy that relies so much on oil, forex oil.
Okay, Dr. Waleke and other gentlemen on the program this morning. We have reactions coming from Nigerians who are watching this program already. We'll take a look at them, and when we return, at least to continue discussion, we'll take a look at what other countries or developed nations are doing very well that will cover relief for Nigeria. We'll start off with that from Sani Michael Omakoji. Says, first thing first, as we say in accounting concept, get rid of those quacks and corrupt stockbrokers, then we are good to go.
Harun Mohammed has this tweet: the potential of the stock market should be maximized so that the economy can move forward.
From Mike Anyako, we can augment funds through capital market window. The challenge now is how to make our stock market strong and viable.
Festus Akimboyewa has this tweet: the stock market is very important in our quest for economic development, and the government must create the enabling environment for it to thrive.
From Dele Jack Solomon, thank you for bringing this topic on, on this topic for discussion this morning. It's a clarion call to government and corporate organizations to sit up.
Well, this is from Suleiman Sanusi, a tweet. I read it yesterday that the Nigerian government offered 430 billion naira for bond sale in the first quarter of 2017. Now, what's the take of your analysts on this?
And still from Suleiman Sanusi, Nigerians lost hope with both the financial institutions and stockbrokers as well. Perhaps that's why the sector is in decline.
All right. Now, those are some of the tweets that we are taking in the meantime. Just to return to our guest, Farouk Umar. Farouk Umar, we're putting you on standby, but that will be after this break.
Certainly, Ajunwa is the Olympic champion.
We did it before, and we can do it again with the new strategy.
Lagos office. You can email us on ntap2000@yahoo.com. Call us on 080-2316-3474 or 080-6939-5185 or 070-3189-0555. NTA Properties Investment Company Limited. The much needed help at your doorstep.
All right, you're welcome back, and it's still Good Morning Nigeria. We are reaching you live on the network service of the Nigerian Television Authority. Now we're going over to Dr. Farouk Umar. Dr. Farouk Umar, of course, you're president of the rights of for the advancement of the rights of Nigerian shareholders. What, from your findings, is the level of participation of institutional investors in the Nigerian stock market? and how might they get attracted to come into the loop of investment?
Can you come again, because you...
Of course, you are in charge of the advancement of the rights of Nigerian shareholders, and I'm asking, what is the level of participation of institutional investors in the Nigerian stock market, and how might they be made to get more interested in the loop of investment in the stock market?
The line correctly, you are asking me to comment on the participation of
Yeah, well, it looks like it's freezing. Dr. Omar, once the Skype connection clears up, we'll come back to you to respond to that. But let me take the question to Johnson Chukwu. Johnson Chukwu, at our Lagos Network studios, again, the depth of institutional investment in the Nigerian stock market, is it sufficient? That's one leg of the question. Second leg has to do also with a number of big companies that are actually private entities. How do you get them to become quoted companies on the stock exchange?
Okay, let me start with the first leg of your question. The institutional investors we have in the country today are the pension fund administrators, the banks, the staff cooperatives, and these institutional investors, the larger part, the one that holds the liquidity that we are talking of today is the pension fund administrators. And they have shifted a lot of their investment to fixed income instruments. If you look at their investment profile, you realize that more than 80% of their investments are in federal government debt instruments. So that would indicate to you that institutional investors are moving away from equities. The other institutional investors are the banks. The banks are also not strong in equities. The bank's investments that are held in government instruments are in fixed income instruments. The staff cooperative, the insurance companies are actually very weak at the weak leg of the entire institutional investment chain. So they are not also strong in equities. So you realize that the institutional investors today are very weak on equities. For those factors I mentioned earlier, issue of return threshold, I mean, no rational person will put money in a risky instrument when a risk-free instrument gives you a much higher yield. So rational investors are moving away from equities. That's the first part of your question. The second part is that how do we bring in a lot of the big institutional corporate players in the economy to list in the exchange? If you look at the plan by the Nigeria Stock Exchange to have a $1 trillion listing, that was premised on some sector that the NSE thought they would bring into the market, one of which was the oil and gas sector. The oil and gas sector today is actually the weakest link in the entire economy. It declined by about 22% in the third quarter of this year. And most of these institutions, we have mentioned the issue of drop in oil price, but beyond the drop in oil price, you also realize that production is a major challenge. A lot of the Nigerian producers are not even able to export because the pipeline with the use for export have been breached and are going through repairs and continuous breaching. So that's one aspect. Then the power sector operators, you can actually see the power sector operators are struggling to recover. That sector was among the targets that the Nigeria Stock Exchange was thinking they would bring into the market. Then you look at the agricultural sector. The agricultural sector is still going through a level of structuring. You find out that apart from Okumu and Presco, you do not have a lot of agricultural operators that are institutionalized as to come to the market. So you find out that the major sectors that should come to the market are either going through difficulties or have not been seen the incentive to come and list. Let's look at the telecom sector. The telecom sector at the time the plan was done for 1 trillion was growing about 9%. That sector is growing about 1% today. But beyond that, the incentive to list in the market is not there. Issuers are incentivized to list in the market if they believe that the stock price will mirror their intrinsic worth and add a premium to them Yet investors are looking for, institutional issuers are looking for liquidity in the market and access to credit. If you are listed, it should actually give you cheaper access to credit. Today we don't have that. The market prices are not reflective of the intrinsic worth of the companies. So when you list, you are likely going to see a devaluation in your worth because the market is going through a contraction. Then, added to the fact that the market does not have so much breadth. If, for instance, take for instance the likes of Dangote. The Dangote has not even been able to offer to the market the minimum threshold that a quoted company should have because the market cannot take it. By the time MTN lists, it is Lat and all the rest list. The market does not have that level of liquidity, that level of depth to absorb the listing. So you have to contend with three issues. We do not have the right incentive for big companies to list because it does not give them access to credit at cheaper price. It does not give so much of liquidity that shareholders in those companies can liquefy their investment. And the market price is not reflective of the underlying intrinsic worth of the quoted companies today. So there's no incentive for those companies to list.
All right, Johnson Chukwu, thank you very much. Just to return to Dr. Olowokure. Dr. Olowokure, of course, you work with the regulator. I just listened to Johnson Chukwu talk about the lack of incentives to get some of these big corporations to list. In your opinion, what needs to be done to encourage them or to incentivize them, as it were, to list?
Okay. When you spoke about lack of incentive, I think there are about two incentives. There are those that can come from the regulatory angle, and there are those that can come from the market angle. Market angle in the sense that you want to come to the market when the price is right. And of course, you don't want the regulator to then fix the price for you so that you can come to the market. That depends on the general macroeconomic environment. It depends on what is happening to inflation. Therefore, the central bank tries to stem inflation, then raise interest rate, which then makes bonds to be more attractive for investors. Then people move to the debt market as against the equity market because there are trade-offs. So that's a general macroeconomic environment, and that can be solved in the medium to long term in the sense that invest in infrastructure, try to solve inflation problem from structural side by reducing cost of production, and at the end of the day, the economy will be more balanced. For the regulator, what you can do is to then create an enabling environment in terms of regulation, in terms of rules, and in terms of some kind of encouragement by letting these companies say, these are the advantages of being listed, these are the things that you stand to benefit. And at the side of the Securities and Exchange Commission, we are doing that. If you look at the Capital Market Master Plan, there is a side for new listing. And in the new listing, we have a committee that goes to different companies to try to see how they can get listed and see whether there are disincentives that can be removed for them to be listed on the capital market. And I would like to tell you that maybe this year, we are likely to see about 2 to 3 companies as a result of those efforts that will come to the market. So that will have to do with encouragement, letting people see the benefits of it, and also trying to see how you can reduce the transaction cost. In other words, transaction cost usually is a disincentive to investment. So if you then say, okay, instead of this, we are trying to bring it down, and that is done by Securities and Exchange Commission with different SROs. I mean, Nigerian Stock Exchange is very collaborative on that, and there are quite other platforms that are very interested in bringing the transaction costs down so that companies can be listed on the capital market.
Okay, Dr. Waleke, I know you want to respond to that, but take this alongside.
It's a major challenge. We need to really deepen the market. If you look at the way the market is structured right now, there is over-concentration, by just a few stocks. 4 stocks constitute more than 60% of the entire equities market capitalization. If you remove Dangote Cement, if you remove Nigerian breweries, okay, Zenith and Nestle, the market goes down. And Dangote Cement alone accounts for over 30%, of the equity market capitalization. So that in itself is a challenge. So that is why, we need to...
Why is it a challenge?
Yes, if something happens to, these stocks, the market, crash is, yes, it will amount to, a market crash. And that is why, it is cheering that MTN, announced last year that that it will be listing, on the stock exchange this year. MTN was signed 1.4 trillion but that fine was reduced to about $300 billion, dollars, to enable them. One of the conditions is that conditions given to them, was that they would be listing on the stock exchange. So that again is an incentive. So these incentives need to be there, especially on the fiscal side. The government can use fiscal incentives to get some of these companies to come. When I say fiscal incentives, I'm referring to tax. Companies' income tax today is 30%. The government can say if you a quoted company, you pay 25%. Okay, that is an incentive. In fact, records show that the bulk of the money today that the FIRS collects, from the company's income tax, come from over 60% of it come from companies that are listed on the stock, stock exchange. So that tells you that if we have more companies listed on the stock exchange, it will also translate to more, revenue for the government. They have also been talking about last year too. They talked about a policy, I think, oil and gas policy, that will also see the NNPC being quoted on the stock exchange as the National Oil Company of Nigeria after it's restructured. So if that happens and MTN is listed as well as other telecom giants like Airtel and Etisalat, if they all come, including the power companies, if they all come, you can expect that probably the target set by the stock exchange in 2012, target of $1 trillion capitalization, it's lapsed in 2016. It was not met as 2016. Probably we could, come close to meeting those targets.
I was wondering, Dr. Waleke, just before we go back to Dr. Farouk Umar via Skype, I would like Dr. Olowokere to speak to this. The power companies have been mentioned by the guests on this program. Are they also being incentivized or canvassed to list? The reason I ask the question is one of the commonest complaints that they have, whether they are Gencos or Discos, particularly Discos, is the paucity of funds, which is why they keep going cap in hand every time to the central bank. Why don't you list and then let people subscribe to your shares and then give you an opportunity to raise capital?
Maybe I should add to the paucity of fund. Another factor is pricing of the output. I think that's also a major factor. Whoever is going to buy such stock will be interested in how is it going to be priced, the output of those companies, and how much they can realize from those output. In other words, it's beyond fund. It's also what am I doing with the fund and what is going to be the return on the investment. You also know that in this country there are quite a number of issues around. We cannot increase the price of power. We have to do it at this rate and that rate. So that's also a very major factor. You want them to be listed, but you also don't want to say, oh, we are listed, but we cannot give return to investors because our prices are regulated. So there are market discipline, just as I said, and there are regulatory discipline. The regulator can create the enabling environment. The market will also be able to discipline you in terms of what comes to the market and what people are able to price and at what rates.
Okay. All right. Thank you very much, Dr. Olowokere. Mr. Johnson Chukwu, again, can we try to tie all of this up, to what we have for the 2017 appropriation, of course, which includes the budget as well as fiscal and monetary policy measures enunciated by the federal government. Do you see a sense in which there is a focus on the stock market as an avenue for raising sufficient funds in order to help reflate the economy and get us out of recession? Alternatively, do you see a focus, say, on the monetary side, recognizing now that, look, there is a drift towards government debt rather than towards equities, and this is now creating some asymmetry? How do we begin to reconcile this?
Let's start from the fiscal side. If you look at the budget provision for borrowing in 2017, we have about 2.36 trillion that the government wants to borrow. Of that, about 1.26 trillion is going to be coming from the local market. That averages about 100 billion naira every month. At 100 billion naira every month, that will affect the level of liquidity in the economy. And that means we should expect that interest rate will remain high in 2017 unless the government changes that policy. And if that happens, the high return on federal government debt instrument will continue to crowd out the private sector from either accessing money in the bond market, or even investors patronizing the equities market. And those two factors will constrain the recoveries at the private sector arm of the economy. So I expect that these policies, unless the government has to look at it, if you look at the monetary policy environment, the central bank governor has actually emphasized that the central bank will continue to adopt contractionary monetary policies. Unfortunately, the contractionary monetary policies that have been adopted to stem the demand for FX have not been effective, because the demand for FX was not driven by liquidity overhang, but rather driven by basic demand to meet basic needs. And I've always mentioned this, that today, the frivolous demand for FX have almost been eliminated. Simple reason is this: at current exchange rate, it will be difficult for you to be buying, importing anything. So the demand we have in FX is basically close to inelastic demand, because that is to meet importation of petroleum products, importation of pharmaceutical, payment of school fees, and some basic machinery and equipment and raw materials. So that monetary policy, we need to review it. The federal government need to reconcile the issue of treasury single account. A situation where we suck out liquidity from the economy will not allow the private sectors to recover. And without recovery at the private sector level, then the stock market may not see any major rebound. So for us to achieve rebound in the stock market, we need to address the issue of liquidity. It will come both at the local currency liquidity and the foreign currency liquidity. And then the government must reduce the rate at which it's borrowing and minimize the rate at which it's crowding out the private sector from accessing funds in the economy.
Okay, Mr. Chukwu, thank you very much. We'll return to Dr. Umar in Kano now. Let's have a quicker area of interest for you, as we have talked about so many issues. Kingsley asked some question earlier. I'm sure you heard that, or you're able to put, if you can still talk on that. But reflecting the economy at this point through the stock market, the way forward, 2017, we must rejig the economy. How do we do that?
To move forward, the federal government be exemplary. We want MTN to list. So why is the government not listing like the refineries, which if we lead them, Nigerians would be more interested in investing. So I think government should make sure that foreign companies that come into this country are forced or are persuaded to list. You can't go to South Africa, a Nigerian company, and list 100%. So we have to do that. And then the next thing we need to do regarding the market is to ensure that once you invest, you are protected and you get returns. For example, now, from next year, if we are lucky, there will be no more dividend that will be printed. You either have an account or you don't. So that is another issue. Then, thirdly, government must protect investors. Look at it. I pay 10% withholding tax. The company pays 33% tax. Then we pay education tax. So many taxes, local government and so on. How can you operate a business and make business with so many taxes that you have to deal with? So I think government should do this. And then on a final note, generally we have seen what the stock exchange has been doing and what SEC has been doing. But in all honesty, we should make sure that we dematerialize because certificates, up till now, investors are having certificates, and unless we dematerialize and make sure that registrars are made to credit all the shares into an account. You want to sell your shares now, you have to send your certificate, it has to be verified, and it is becoming a big issue. You were asking what is the difference between the market that is operated in Nigeria and abroad. So many things. You don't have corruption to the level you have. You have electricity there. Power is available. Go to China 100%. And you don't have insurgency. Every time we are fighting and so on. And this is not, again, healthy for this economy. To add salt to injury, what the stock exchange and the SEC are doing, you find that now the National Assembly is trying to bring the crop backwards. You see, nobody is funding SEC. Nobody is funding the Nigerian Stock Exchange. It's from what we pay as commission that they survive. And now the regulators are still investigating them and diverting their attention on allowing, rather than allowing them to concentrate and police the market. With this words, I think I believe this year, 2017, the economy is going to come up. We have started seeing improvement in electricity, and we have started also seeing activity beginning of this year in the stock market. And I believe with the oil price likely to go up, with government going to release more money, the budget will be approved. I believe this year the index will move forward.
All right. Dr. Farouk Umar, President, Association for the Advancement of the Rights of Nigerian Shareholders. You joined us via Skype from Kano. Would like to thank you for being part of our conversation. But just for me to add a footnote, you talked on a number of occasions now about the role of insurgency in the dip in the fortunes of the Nigerian stock market. I don't know how you can validate that. South Africa, during the liberation struggle, didn't have its Johannesburg Stock Exchange closed down. Maybe that's a discussion for another day. Once again, we'd like to thank you for being with us on the program this morning. All right, just to indicate that we have another set of tweets now to take from our viewers who've taken advantage of our Twitter handle at NTA GMN. And with Change to Progress, says banks created the bulk of the problem in the capital market, starting from fraudulent insider trading and bad loans since 2008. Well, that was when the effect got on, by the way. Yes.
From Bright Irene, if this idea or the ideas from your panelists are vital to Nigeria's economy, why don't the appropriate ministries or bodies implement them?
This is from Lee Baby. That's the Twitter handle. Today's topic has really taught me a lot as an entrepreneur. I love watching Good Morning Nigeria. I will say keep watching.
And from Abdulaziz Mayowa, there are opportunities around in our country. Identifying and tapping them is what we need to work on to better self and the nation. Again, from Change to Progress, the CBN needs to focus more on corporate governance within banks. They played Ludo with people's money. See our corrupt fund movement. Now, those are the tweets that we can take at the moment. Just to get the closing thoughts of our guests, yes, in the Abuja studios here with us, Dr. Waleke, one more time. Again, in terms of policy alignment, what exactly do we need to see on the fiscal and monetary side from your perspective so that specific to the stock market, we can begin to see an upswing in the performance of equities?
Yes, the government needs to recognize the fact that the stock market and indeed the capital market, plays a very vital role, in an economy, and that's why some attention should be given to the stock market. If you read budget speeches or even the medium-term expenditure framework statements of some countries. A good example is Malaysia. You find specific sections of those budget speeches, dedicated, to how the government intends to encourage the capital market. We don't find that happening here. So, if we find the effect of the budget on the capital market at all, it's more like an indirect effect. Talking about the size of this expansionary 2017 budget, the 7.298 trillion naira, especially the capital component, that is about 2.24 trillion naira. So if that is well applied, power sector, power works and housing, for example, is taking the largest chunk. If that is well applied, of course, you will find some ripple effects on the stock market. Now, it's also important to recognize that this handshake between monetary and fiscal policy, need to be strengthened. Fiscal policy cannot be expansionary, and monetary policy is, contracting. So there is need for the central bank. The CBN Monetary Policy Committee will be meeting sometime this month. There is need for the CBN Monetary Policy Committee to also revisit the monetary policy rate.
All right, Dr. Uche Waleke, Associate Professor and Head of Banking and Finance, Nasarawa State University, Kefi here. Thank you very much for joining us on the program.
Thank you for inviting me.
We'll quickly take our closing thought of Mr. Chukwu in Lagos. Briefly.
I think the basic thing is, like Uche said, is that we need to harmonize the monetary policies and the fiscal policies. We cannot, as a country, at a period when we're having contraction in the economy, continue to have contractionary monetary policies. We have to adopt unconventional monetary policies to win Nigeria out of this crisis. We should take a look at what the US did when they adopted quantitative easing. We should look at what Britain is doing after the Brexit vote, where they have adopted a lot of expansionary monetary tools. We must determine what is of paramount importance to us as a country. And for me, I think it should be to restore economic growth. I don't think the emphasis today should be on inflation. By the time we restore economic growth, inflation will over time moderate. The inflation is not driven by liquidity in the economy, and it cannot be contained by sucking out liquidity from the system. Let's build economic policies that are focused on restoring economic growth. Let's not ignore the private sector in our policy environment. We must give room for the private sector to access credit at a relatively good rate so that we can grow the economy.
Financial experts, Mr. Johnson Chukwu, thank you very much for your insight on the program this morning.
Yeah.
Yes, Dr. Lowo Kiri. Briefly, as in briefly now.
Yes, I think
investors' return.
First thing, we must realize that both the debt market and the equity market are in the capital market. In other words, one can suffer, the other one can be booming because of the current expansionary fiscal policy of the government. However, by the time the government gets such money, and those money are spent on what they are supposed to be spent on, and is truly expansionary, you then expect that the equity side should also benefit from what is currently happening in the economy. Thank you.
All right, Dr. Lowo Kiri is of the Securities and Exchange Market, Head of Research. We'd like to thank you for being part of our discussion this morning. Okay, now that does it for our conversation segment on Good Morning Nigeria. We move on now to sports. There are stories on soccer as well as tennis. Defending champions Côte d'Ivoire has already intensified